You are on We Fixed Real Estate, and we are in the midst of Southern California on fire. Fred dialing in from Pennsylvania, Renee dialing in from the road in San Jose, San Francisco. Where are you today, Renee?
San Francisco. In a short sleeve shirt, and I'm bundled. I'm in Philadelphia, the suburbs of Philadelphia. Now, you can't call it Pennsylvania because, as James Carville called it, it's Philadelphia, Pittsburgh with Alabama in the middle. So it's three different places, Pennsylvania. It's a big state too, and it's 27 electoral votes. I think it was. Don't quote me on that one.
Yeah. So last week we were talking about the driest season ever since 1926 in Southern California, and this week
Surprise.
we're talking about the fires in Pacific Palisades, Altadena. I think Hollywood just caught on fire yesterday. It's a terrible.
Yeah, the Hollywood one was quick. It's gone, basically. They
Is
did
it?
a good job of containing that. Yeah. I mean, the first thing I want to tell people there is an app, if they don't know about it already, it's called, I don't know if you can see it,
Oh yeah.
Watch Duty.
Watch duty.
WATHDUTY, Watch Duty. And the free thing is amazing. You get alerts every time something happens, basically. And it's actually national, but like here's the Sunset Fire. I don't know if you can see that. You can't, but you can see it's kind of willowed down to not much of anything. This is
Oh, that's good.
terrible. So, but anyway, if you haven't looked at it, and if this podcast is broadcast or you're listening to it after the fires happened, still download it just to have it
Oh yeah.
because it's great for alerts. It's really nice. It's really easy to use. It looks nice. So it's a really nice website. It's actually a nonprofit that puts it out.
Really?
Yeah, and they do have paid versions. And like the professional is like crazy. Like they tap into all the fire, this and that, and read about it on the site. But yeah, Watch Duty. It's all over TikTok too, of course.
Before we dive in, just want to say our thoughts go out to everyone that's being affected by it.
Oh God.
We're going to be talking about the sort of the ramifications of the fire, but want to make sure everyone knows we're very sensitive to those. And
Yeah. Yeah. I mean, we're not here to give you an update on the fires, obviously, 'cause we're just talking theory and looking down the road. And, because this will all start in earnest, that everybody will have their solutions or whatever. Let's realize a few things. The people in the very expensive houses in Pacific Palisades probably already have second homes
Mhm.
or the ability to pay to fly out to somewhere and go and do something. But what was interesting today, we had a client, new client, 48 hours old. They said, "Hey, we've been looking at this house. We saw it on an open. They're asking somewhere in the threes, 3.6, 3.7. It's been on the market over 100 days." And I was like, okay, we're ready to pounce. And they called us, and we had our Google Meet. And by the way, that's what we do with every client. Me, Renee, and clients get on the phone and we discuss everything. So we all know what we're doing, as opposed to just call up, "Oh, who are you? What are you doing?" It doesn't work that way. So it's great. So now we all have knowledge. But anyway, I'm digressing. So we said, okay, fine. So we started to contact the agent, and she said that the buyer had tried to contact them and they didn't answer for a couple of days. So we figured there's something involving the fire. So we finally get on with the agent. Renee does this morning. Renee, you want to go from there on the story?
So this one was pretty close. I'd say maybe 10 to 15 minutes away tops from the fire.
In Santa Monica. Yeah, let's
Yes.
let's say that.
Yeah. So the agent tells me, "Oh, look, well, yeah, it had been a little bit quiet through the holidays, and we did do a price reduction. It had been, with the season. I mean, obviously after Christmas and New Year's, you do get a new amount of traffic." And they said, "Yeah, with these fires, we have one person who has decided I'm waiting on the offer, and a second person who's a cash buyer who did lose their home from the fire and who wants to move quickly. So we're expecting a second offer for that." I didn't get the uh, I didn't get the info as in if the first buyer was also affected by the fire, but they could have. And then he also mentioned that in his brokerage he saw. He says that rentals are probably like 1 or 2% of the business, and he said that they were getting calls nonstop in terms of people looking for rentals, and that it just became like everything that they're doing now. So not only are buyers who have been looking for houses now have a much smaller inventory range, but then now you're also competing with sellers who bought a long time ago, who maybe weren't getting their number and they were ready to do price drops, who now are saying like, hey, actually, let's just rent them. And I know that Airbnb is doing some form of promotion.
Every week. Yeah.
But it's like, as those things do dry up, remember, people have really short memories. People still need a house for 6 months, a year. Building in LA, especially in the coasts, it can take years, right?
So they're going to have to do kind of what they did in Malibu, which is waive a lot of things. Basically, if you're putting the house in the same envelope that it's already in and the same height, and you do everything to code, you should be able to get things done quick. But, there's a bunch of things to look at here. If you listen to this podcast any amount of time, you've heard me talk about this 3D cement printing, which, we got to find alternative ways to build. I futzed around on ChatGPT, and, we're going to take that and then put it on Notebook LM, and we'll take some of the Notebook LM and put this into the podcast.
All right. So today we're going to dive into something kind of heavy, those wildfires in Pacific Palisades.
Oh, yeah.
It really makes you think like,
right.
What if that was me?
Absolutely.
So we're going to explore how these fires have really impacted the real estate market there. And I think it's a lot more complex than most people think.
Oh, absolutely.
Yeah.
Yeah, it's a chain reaction for sure.
Yeah.
There's so many ripple effects that last for years.
It's not just the immediate damage. It's like what happens 6 months later.
Exactly right.
A year later, 5 years later.
Totally.
And we're talking about Pacific Palisades,
right.
Which is, a pretty affluent area.
Absolutely. Some of the highest property values in the country.
High property value.
Yeah.
So how does a disaster like this really shake things up in a market like that?
Well, we can break it down into 3 phases, right? Immediate impact, then the medium-term adjustments, and then the long-term outlook.
Got it.
And each phase has its own challenges and opportunities.
So let's start with that, like the immediate impact. Obviously, there's a sudden drop in available housing when something like this happens.
Of course.
So we know that rental prices tend to go up in a situation like this.
Right.
But is it really that simple?
Well, it's not just supply and demand.
Okay.
You've got to think about it. We're talking about hundreds of families that need to relocate immediately.
Yeah.
And they need somewhere to live right now.
Yeah.
So short-term rental prices absolutely skyrocket.
Well, how much are we talking?
You can see 25%, even 50% increases.
Wow, that's a huge jump.
In some cases, yeah.
And, while those prices are going up, what's happening in the sales market?
Right.
Do people even want to buy in an area like that after a fire?
Well, there's initially hesitation.
I would imagine so.
Right, as buyers sort of process the risk.
Yeah.
But then you have this other group that sees an opportunity.
And who would that be?
Investors mostly, they're betting on that long-term recovery.
Okay.
And potentially snagging a property at a discount.
So it's this push and pull
exactly
between risk and reward.
That's a great way to put it.
So let's shift gears a bit.
Sure.
Let's say we're 6 months out.
Yeah.
Maybe a year after the fires.
Yeah.
What happens then?
This is where insurance becomes a major factor.
Okay.
Not just prices increases, which are pretty much guaranteed.
Yeah.
But the availability of specific types of coverage.
Oh, so it's not just that it costs more, it might not even be available.
That's right. Getting comprehensive fire insurance in a recently burned area can be almost impossible.
Wow.
And without that, a lot of lenders won't approve mortgages.
Oh, right, because they need to know that the property is insured.
Exactly. And that really narrows the pool of potential buyers.
Makes sense.
And that can further impact property values.
So it's a double whammy then.
Pretty much.
Higher premiums and limited coverage.
Yeah.
Making it tougher to buy and sell.
Yeah, but you also have to remember that amidst all of this, you have rebuilding happening.
Oh, that's right.
Right. You have these new homes that are potentially being built to higher standards than before the fire.
So is that bringing some positive changes to the market?
Absolutely. Post-fire rebuilding can actually be a catalyst for improvement.
Okay.
You see a lot of innovation.
Like what kind of innovation?
Fire-resistant materials and landscaping,
Oh, interesting.
metal roofs, stucco siding, drought-tolerant plants.
Yeah.
Features that not only add value, but also peace of mind for future buyers.
That makes sense. It's like out of destruction comes this new wave of innovation.
For sure.
But even with all these upgrades, there's still that psychological factor to contend with.
Oh, absolutely.
The stigma of fire.
The stigma, yeah.
Does that linger?
It definitely can. You're right.
Okay.
It's not just about the physical rebuilding, it's about rebuilding confidence.
Right.
Data shows that even 5 years after a major fire, properties in those areas can sell for 5 to 10% less than comparable homes in unaffected areas.
Really?
So yeah, that's a factor that both buyers and sellers have to consider.
So the medium term is kind of a mixed bag then.
Yeah.
You've got this innovation,
Right.
but you've also got this uncertainty.
Totally.
What about the long term?
Yeah.
What's the long-term outlook for Pacific Palisades?
This is where it gets really interesting.
Okay.
You see, Pacific Palisades has some fundamental advantages that don't go away.
Like what?
The location, proximity to the ocean, the community.
Right. It's a desirable place to live.
Exactly. And you have a limited supply of land,
Which means?
which puts upward pressure on prices.
Always.
Always. So you combine those factors with all this rebuilding,
Yeah.
and you start to see a recovery.
And not just a recovery, a shift towards maybe a more resilient,
Absolute.
fire-adapted community.
Think about it. You've got these brand new homes
Yeah.
built to modern fire standards in this incredibly desirable neighborhood.
Yeah, they're going to be attractive to buyers.
Exactly. And as that memory of the fires fades, the market's going to respond favorably.
So almost like a cycle of destruction and renewal leads to a stronger market.
In many ways, yes.
Wow.
It's about adaptation, That's something we see again and again in real estate. But remember, the impact isn't uniform across Pacific Palisades.
Oh, right, of course.
There are micro markets within the area,
Sure.
some closer to the burn areas that might see a slower recovery.
So it's really important to keep in mind those nuances within the larger market.
Exactly.
So we've seen how these wildfires have created this complex chain reaction in the Pacific Palisades real estate market.
Absolutely.
From those short-term rental spikes to long-term trends. It's this story of disruption, adaptation, and ultimately resilience.
And it all comes back to that community response. How quickly and effectively the rebuilding happens.
Yeah.
How they adopt fire mitigation strategies.
Yeah.
These all play a role in shaping the market.
It really highlights how interconnected these factors all are.
Absolutely.
And as we navigate a world increasingly impacted by climate change and extreme weather events,
Yeah.
how might these factors shape real estate markets beyond Pacific Palisades?
That's the question.
It's something to think about.
It is.
So thanks for joining us for this deep dive into the Pacific Palisades real estate market after those devastating wildfires.
Absolutely.
We'll see you next time.
Sounds good.
So you can listen to some of the different types of ways to build that were fireproof. I mean, the cement 3D homes are fireproof, they're earthquake proof, waterproof. I mean, they're fabulous. Still, car parked outside is going to burn. The brush is still going to burn. I mean, how can you have trees that aren't going to burn? I mean, vegetation is not going to burn. That's a big problem. You want to have nice trees at your house, or grow, stuff. I mean, so there's got to be some solutions to this. Putting out a massive, intense sprinkler system, possibly, to protect your house. I mean, people look into things, and also then you got to get the city to approve it, the local people to approve it. You got to get a waiver from probably the Coastal Commission, the Santa Monica Mountain Commission. I mean, I have friends in Malibu who bought up in the hills, and from the day they bought the land until they closed was 17 years.
Wow.
This is back in the 80s. So, and they're both engineers. So they designed it. They know exactly what they were doing, because every time you make one change, it's got to go back to 5 different agencies. So they got to streamline that. That's number one, because you want to the faster you get it rebuilt, the faster everything is going to go back to
Economy
normal.
returns. Yeah.
Exactly. And then the prices of rentals come back down. The prices of the homes come back down a little bit. But we're going to see, don't make decisions based on what's happening today, because today's not real.
Yeah.
Today is an event.
Either way, there's going to be a construction boom, because unlike a lot of places that get devastated by fires, I don't think I've seen one with this amount of capital.
Yeah. Here's
Residents
another thing.
have the capital to rebuild.
Well, as I said, those are the super wealthy people who have the gorgeous, the Larry David.
Maybe the Berkeley Hills fire back in the 90s. Remember that? When
Yeah,
Berkeley Hills
totally.
down was similar amount of wealth that lost their houses.
Well, there's a lot of people in Pac Pal that aren't super wealthy, older people. I saw these people on TikTok that are 91 years old, have been living there for 50 years, kind of things. And 2 weeks ago, their insurance company told them, goodbye. And now they have a piece of land to sell. And they have, that's horrible. But we're going to see the land prices there actually probably go up.
Mm-hmm.
And the people with insurance, a lot of them might say, give me the insurance money, sell the land.
Mm-hmm.
So, I mean, for land, we probably do a better deal than our 15,750 because you really don't have to do anything.
Uh-huh.
So,
You
but
bring up a good point though with the insurance companies, and I just got off the phone with a winery before this call, and they're freaking out. They're in Temecula that their fire insurance is going to get eliminated.
no, it's going to be a nightmare. This is something Governor Hanson's got to handle right away. I'm sure he's on it. 'Cause there's got to be an answer to this. There's fair play, in California, which is expensive and limited. You really got to still get liability. You got to get a bunch of other different coverages. It just covers wildfires and something else. It's very minimal coverage, but it'll get you more. If you're going to go for a mortgage, you need insurance. If you have a mortgage and you were there, I mean, it's going to be full of insurance adjusters, lawyers, insurance companies, mortgage servicing people, and it's just going to be a red tape.
I know that we mentioned that there's a lot of wealth here, but so let's say you're using a mortgage. Yes, they force you to get insurance, but is there a verification process that they verify that you have insurance month to month? Or how do they?
Well, they collect your mortgage payment, and or they have a certificate of insurance that lasts until a certain date. So they know it expires June 30th, 2025. Hey, you're insured. And they didn't get sent a notice because they become an additional insured, which means the insurance company would have to notify them of the cancellation in addition to the owner. And by the way, we're not even talking about the commercial stuff in the storefronts. That's a whole different world. We don't do commercial, but that's going to be a nightmare too. But those guys and their insurance companies, and it's commercial insurance, it's different than residential. They're all going to be fighting World War III. I mean, these insurance adjusters are going to be making a fortune. So
just restate the obvious, or what we talked about. It's not so much even the people that lost their homes, it's that impact that's going to ripple throughout the whole Los Angeles community with other people maybe they want to relocate from Pacific Palisades or Altadena.
Yeah. I mean,
raise the housing prices of the existing homes.
Well, here's the thought. I mean, are you going to go down to Orange County and buy a Newport Beach now instead? We had a deal that just fell out of escrow I think it was in Orange, California. Am I right, René?
No.
Somewhere.
It's in San Diego. But the idea is...
Oh, that's right. I'm sorry.
Yeah, I mean, absolutely. I think, and this is where Fred maybe is changing his mind now, but if you're in Los Angeles, yeah, sure, maybe you have family that's in LA and you don't want to leave LA, but the community, the traffic from LA to San Diego, it's really minimal. So you see that change every day. You see people selling their houses in LA to go to San Diego, the same way that you see people leaving San Francisco to go to San Jose, right?
I think you might even see people going from LA up to San Francisco or LA up to Napa, Sonoma, just to get away from it all. But it's what lifestyle you need and you want. So it's not like they're all going to Idaho like they did during the pandemic. That's way over. Um, there's people who move between California and Washington state because in Washington state, there's no state income tax. You give yourself, you're making 500 grand a year. You're paying some enormous state rate and you can save that. I mean, it's probably 50, 75 grand a year. Prices are cheaper and there's some gorgeous houses up there. I mean, it's not as great
Probably live
weather.
in Camas, Washington, or Camas. Yeah, Camas, Washington. So you
Right.
could drive across and buy your stuff in Oregon.
Exactly, where there's no sales tax. So it's the cheapest tax place to live, I think.
Mm-hmm.
So yeah, I mean, everybody's going to have a little different story, but there's just be careful out there, kids. And, it's going to be a little nuts, but insurance is going to be a big thing. Building, time for the politicians to step up and make it easier and make it more comfortable and help people. And we'll see what happens. I mean, we don't know the results of all these fires. There might be more fires.
We're recording this on January 9th, and this will go live 7 days from now, so on the 16th. So when you're listening to this, it's going to be a very different landscape, but what we're talking about construction, alternative construction, insurance, that's not going to change.
Right.
That conversation is going to be just as relevant in a year as it is right now.
Yes, it is. So it's, I feel sorry for these people. I mean, just the aggravation of losing your house and memories and everything else in your life. And now you got to deal with an insurance company.
Mm-hmm.
Like, you thought United Healthcare was bad.
Mine just went there, but yeah.
Yeah. So I mean, it's just going to be nuts.
Now, is there such a thing as I don't even know if this is a thing. So you're wealthy enough where you maybe have 2 million, but you don't want to, and you can pay cash, but you don't want to tie up all that cash in the house. Is there a way to do like an impound investment account that serves as the collateral for a mortgage?
So, yeah. So let's say you got $2 million. You have it in stocks. You can borrow against the stocks, usually only up to 50% margin. So you put, maybe you get a mortgage for the other million, but what you do is you buy it cash.
Mm-hmm.
And then you do your financing afterwards, because the cash deals are going to get done faster than a non-cash deal. But you might even have a mortgage contingency. And hey, if you need to get a mortgage and you're in this market, you want to move fast, make sure you get, and I've said this 100 million times, a fully underwritten mortgage for your approval. We can get them done in 2 days. Go to somebody who can get them done fast, who can close fast, who gets it. Don't listen to loan officers. That's another thing I had, separate topic. We had a loan officer. He tells our buyer, well, you only want to get a mortgage approval for, the amount that you're going to offer, because then they can come back and jack the price up on you. Well, they're so stupid. First of all, these loan officers, stop it. You're not negotiating. You don't know what's going on. You don't have a license to negotiate anything. So the reason they've done that years ago, if you're the only buyer and nobody else is going to put a bid on it, maybe you play that game with the owner. But if you're in a multiple bid situation, here's the problem. Say it's a $2 million listing. You come into 2 million. The loan officer gives you 2 million approval. Well, now there's 10 offers. And now they say, okay, we're going to go to a second round and we'll go to everybody. Except you're not going to be involved in it because you only qualified for a $2 million house and this is going to go higher. So the loan officer screwed you out of the house because what you do is, I told this woman again, tell the loan officer to get you approved for the max you qualify for. It's got nothing to do with the price. You want to show the seller something to make them as comfortable as possible. And that's what this does. Like, look, I'm approved for $3.5 million. I'm not paying you more, but you don't have to worry about the mortgage because I'm super qualified. And they go, oh, okay, that feels better. So don't listen to loan officers about how to negotiate your real estate contracts. They're so smart, they're stupid. The other game they play is they want you to come back to them. Oh, I need the new approval for 2,000,001 now. So you keep thinking of them as your go-to guy, and you don't shop them after you get under contract. Because they're establishing the relationship with you, blah, blah, blah. So yeah, they're just sales guys. Okay. They're licensed salesmen.
But that's why you also, as a seller, you're going to prefer a cash transaction because you don't have to deal with any of that back and forth. And secondarily, the cash offer doesn't have to get insurance, which goes back to our fire conversation, right? And we have a lot of buyers. We have a lot of buyers with a lot of money who know that insurance is a scam. Because that's actually the big part of it too, right? There's a lot of people who don't have the insurance because even if you can get it, the premiums are just so much higher than just self-insuring it yourself. So it's one of those things where you are playing with luck, and it's better to have it and not use it than to not have it and then have to use it immediately, especially if you just bought your home and you have a huge mortgage. But yeah, no, that is the option that cash buyers do have that mortgage buyers don't have. So that's why you also are a preferred buyer of your cash. And cash is king, right?
Cash is king.
King, queen, and everything.
What other advice do you have for someone that may be living in the LA area that's going to be thinking about either relocating or buying a home in the next few months? Is it rent for a while? Is it just buy if you see it? Or
I know our business is to help buyers and sellers with their properties, but looking at the numbers with the way that the industry is looking like, the numbers really don't work out to buy, really, right? So it's one of those things where unless you're having the money, and unless you need to put the money somewhere because your family is giving you the cash to put a down payment and everything, and your mortgage is going to be lower, I think it is cheaper to rent. Except that now with the fires, it's going to be the opposite. So it might actually be more cost effective to buy now. So I think it's right now, as Fred mentioned earlier, he was talking about how people are going to sell their land. It's not really about the house, and don't focus on buying a beautiful property. Do focus on the actual land, because if something like this does happens again, all you have is a land. And a lot size that's 10,000 square feet is going to sell more than, if you have a 4,000 square feet lot, which is really usual in San Francisco, right?
Yeah.
Especially, now with these fires, I mean, I'm sure there's going to be people that they're going to reassign the lots and build, apartment complexes and things like that. I mean, that's not going to be everywhere, but I'm sure there's going to be a new redevelopment, right? So,
yeah, rezoning and things. An interesting thing, I looked at the MLS today in Los Angeles, and there were from Santa Monica on south to Redondo, single family, there were 20 new listings that came up today, because what you had is a lot of stuff that people took off the market during the holidays, and or people who were about to go on the market. They pushed this up because, they think there are buyers right away.
Mm-hmm.
So it'll be interesting to see. We'll see price increases maybe. That'll give us an idea. If one really goes nuts, everybody else will raise prices. So keep a close eye, have your Redfin or Zillow alerts set for the prices a little lower, because there'll be different types of properties coming up, and you just never know. It might be a house you like that you say, oh, I can live in that for a couple of years while I build back my other place, and then fix it up and sell it, or just keep it and sell it, or as is and sell it. So, you might.
Yeah. And I was going to say, the good news is that we're already kind of prepared for this kind of disaster in a way because of the pandemic, where a lot of these people in LA can work from home, and you're seeing a lot of slashing of those regulations of like, oh, mandated back into the office. So you're probably going to also see a lot of the people being pushed back to being allowed to work from home.
Yeah, so that's another consideration, but who knows? It's crazy. I mean,
the only thing certain here is it's changed. Like if we thought it was predictable the last couple of years, and things just seem kind of a little too predictable, nothing about going forward in this next year is going to be as predictable. We can conjecture that housing prices are going to go up, but
It's going to be insane. I mean, new administration, tariffs, business. It's like get out the popcorn. It's just a giant. Try not to get emotionally connected to all the news and just deal with what you got to deal with in your own lives, and that's it. So
sage advice
there you go.
from the blue couch.
And the blue sweater.
Oh, it's
Yeah,
black.
I have 7
this
layers
is-
on.
Oh, I thought
This
it
is
was black.
super dark blue. Yeah.
It's like
Black.
remember that internet phenomena? Is the dress black or blue?
Oh, I dress in black all the time. I mean,
Yeah, so I think it was black, but yeah.
yeah. Dark blue or black. Yeah. I mean, just
Well, if you're listening and you're still watching, which all of you should be, put a note in the comments. Let us know if you think Fred's sweater is blue or black.
okay. On that happy note, let's get out of here and
This has been
enjoy
an
everybody.
episode of We Fixed Real Estate.